Joining us live here in the trading studio is Ken Calhoun.
Hi traders, here's another trading strategy I'm really excited to be sharing with you today. Here's a quick overview of exactly how it works.
Hello active traders, this is Ken Calhoun, president of DayTradingUniversity.com and TradingTelevision.com. I'm really excited to share with you a new strategy for how to trade opening gap down bounce plays. So when you pull up this pattern, first of all, pull up a 25-day NASDAQ composite chart and see if, in fact, the market has sold off and has found previous support at the location with which you're trying to look for these plays. And you can see that they're coming into this stock. We see that there is not, however, confirming high volume, right? The volume down here isn't real high, so I'm not real excited about this unless our volume breaks what? Say at least 110, 120K. Now, do you see this hammer? This is definitely a classic hammer, and it correctly identified the pivot that was about to occur, and it did move up a bit off that hammer. And we're looking at dry ships. Here's a 2-day chart. If we put it in context of the 25-day chart, you can see a huge sell-off, 17 down to 5. Not to say this can't go down to 2, but I think that we're at or near a likely pivot based on the fact that we had an earlier hammer here, and we're starting to see buyers come back into the range between 4, 8, and 5 on this Monday morning, February 2nd, 2009. I'd be a buyer of dry ships at 5.07. I would be a seller of this if it gets down to 4.6. So we're not at 5.7 or 4.6 yet, right? See, the tape is at 4.99. Now we're breaking the 5.03, 5.02. Let's see if we get buyers come into dry ships. Again, my long trigger in this is 5.07. I'm recording this live. Should be interesting to see how this works out on this Monday morning. And again, this is a video on how to trade opening gap down bounces. The few technical advanced strategies that you really need to know to be able to see what's going to happen. Let's take a look at dry ships. They're starting to come in. I'm using 5.0 to 5.05 as kind of my suspicious of a bounce area to stay out. Looks like we're getting to that 5.07, 5.08. Would I be in yet? Not quite, because I still have, this is an advanced tactic for tape reading, we still have the patter of the tape, the conversation that's going on in the tape between buyers and sellers. We still have plenty of weakness down here at the 5.07, 5.02, 5.03. So not in yet. It has to get over 5.07 and hold for at least 15, 20 transactions. Okay, and a quick note here too, it always pays to pay attention to the NASDAQ composite and make your trades accordingly. You can see that from that initial gap down when we started the video, we're now up to 1490. So that was a good call and a very good strategy. You can see the market had clearly moved up sharply from the time that we had started the video recording. The other thing to look at is the trends and the trend of the trend, which is the ARMS index. Precision trading strategies that can really be a big help to you in identifying how one would manage, or how an experienced trader would manage his entries and exits from here. Let's say you had gotten in at the 14.2 as the initial breakout trigger was that I had called. Where would you now trail a stop? We're at 15.40. Now this will run out of steam soon. Okay, we know that. The question is squeezing every last ounce of successful profit out of this trade as we can. We're currently at 15.4, in from 14.2, up over a full point and a quarter. Trail a stop 15.33. That's what I'm going to use, 15.33. If it gets under that, and again, not just a single print in the tape. I need to see 5, 10, 15, 20. But 15.33 is where I would trail a stop in this right now, right? See a little bit of red there starting to show, but I'm not too worried about it yet. If we take a look at the advanced chart, what another winning call from 14.25 up to 15.4. That's why I've been doing this for so many years. Anyway, we're 15.42. I would trail a stop now at a loss of 15.35. So I'll nudge it up a couple of cents. Just a nickel. I'm using a nickel behind the market, in other words. Looks like it may sell back, right? And I'm not going to hold on to a pullback. If this gets to 15.35 or less, looks like it will. Bang! I'm out of there. Just sell it. That's where I would sell right now, 15.33. Now it may drop all the way down here. It may just pull back to 15.25, then run on up to 16 without me. I've seen that happen, but that's okay. That's the exit right now. Does everybody see how that works with lifetime and sales? I like using the advanced chart here because it gives us a close-up look of exactly what's going on. Again, my long call had been just at the 14.2, and it broke out nicely, moved all the way up to 15.4 before retracing, and 15.35 was my trailing stop. That's where I'd have exited the position. We'll see where it moves from here.
Well, I hope you enjoyed the preview. Now here's how to order the complete video for yourself.